EVgo stock analysis. Okay guys, so we're going to talk about yet another EV charging station stock. So I decided to talk about this stock because that last video that I posted about AMZ kind of went viral, and I was mentioning that I thought there were some better plays out there. And some of these plays I've mentioned in the video were EV stocks, in particular EV charging stations. So this is kind of the no-brainer, I think, investment of this decade, guys. A lot of EV vehicles are going to be on the road, and there's definitely going to need to be a lot of charging companies out there to support this growing EV demand. Before I get into the video, guys, I want to mention, have you grabbed your 2 free stocks on WeBull, guys? All you have to do is sign up using the link in the description below and deposit at least $100, and you get 2 free stocks valued up to $1,850, guys. So WeBull is an awesome alternative to Robinhood. You can trade cryptocurrency like Bitcoin as well, which is actually soaring on WeBull as well. I use WeBull every day, and there's also pre-market trading on there that starts at 4 o'clock a.m., unlike Robinhood, which is at 9 o'clock, guys. So heading back to EVgo under the ticker symbol CLII, guys. So this SPAT deal was announced a few weeks ago, and as we can see here, the stock ran up quite nicely, but it's kind of just been hesitating around $21 or so. Not a ton of interest. I see the volume has come down quite a bit. I mean, the volume is basically about 1 million, 2 million shares per day, and I think that's a big mistake, guys, because EVgo is the largest fast charging network in the United States with over 200,000 customers, guys. And I talk so much about how I love Chargepoint on this video. I'm a Chargepoint shareholder, and I have it's one of the biggest stakes that I personally own. Probably my second biggest stake behind Uber. I've been doing a lot of research on EVgo, and I like this one as well, and I was kind of considering actually holding both of the stocks, but I'm going to talk more about EVgo in this video to give you guys kind of some more information on what you should be doing with this stock. So to give you guys a quick rundown on EVgo, it is basically a little bit different from Chargepoint. So Chargepoint also does fast charging, but they also have level 2 chargers where you can charge at home, and EVgo doesn't really do this. So EVgo is basically a fast charging company. They're all about basically delivering the charge to your vehicle as fast as possible, and they are the nation's largest public electric vehicle charging network with more than 800 fast charging locations in 67 metropolitan areas, guys. So like I said, here's an example of how this works. So it says EV Charging 101, DC fast charging empowers you to charge your battery electric vehicle quickly, conveniently, and on the go. Wide charge hours, you can charge to near full capacity in 30 minutes. So as we can see here, here's level 1 charging, and then we have level 2, and then we have DC fast charging. So DC fast charging is substantially faster, guys, and that is going to be one of the kind of selling points for EVgo. They're all about speed, speed, speed. So if we take a look, we head over to the investor relations, guys. You can check out this information by going to evgo.com/investors. And here we are in the investor relations page, where it talks a little bit more. So this deal was announced back in January 22, and the stock is only really run up from around, most of these SPAT stocks start around 10 bucks. So it's run from $10 to $20, so it's still relatively cheap. And the current market cap of this SPAT, if we take a look at this, current market cap is only around 600 million, guys. So basically far cheaper than Chargepoint, but for good reason, because the revenue on EVgo is a lot less. So let's just go ahead over this report. So first we're going to talk about a little bit about the management, specifically the CEO. So the CEO, Kathy Zoe, she studied undergrad at Duke University and got her master's degree at Dartmouth College. And this guy is a really smart lady, and she's really has a lot of experience and heavily involved in just energy in general, and especially renewable energy. Okay, so let's go over the transaction overview. So basically the mission of all of these charging station companies is to basically promote renewable clean energy and to reduce carbon emissions. So all of these stocks, you got Chargepoint, you have EVgo, you have EVbox over in Europe, you have Blink Charging. All of these companies have a lot of positive karma coming, and definitely companies that are fighting climate change are going to be rewarded not just with good karma, but also in the markets as well. I think a lot of investors are going to gravitate towards these companies because they realize how big of a problem climate change is. So this company was valued at around $2.1 billion. That's on a $10 basically, initial stock SPAT price of most of these stocks is $10. So looking at the current price of the stock right now, that once this merger is closed, it'll be about a $4 billion company, which is far cheaper than Chargepoint. So Chargepoint, when the merger closes, as of the stock price right now, that would be about a $15 billion company. So it's a lot cheaper than Chargepoint, but the revenue is a lot less. And after this deal is closed, they'll have zero debt. So let's talk a little bit more about the actual company and some of these deals. So I was really, really impressed by the track record and some of the deals and partnerships that EVgo has. So as you can see here, they're the largest, as I mentioned earlier, largest DC fast charging network, and they have partnerships with companies like Uber and Tesla as well. And I want to talk a little bit more about those deals. So first, let's go over the broad view. This is a map of all of their charging sites throughout the United States. And as you can see here, they have 881. They're number one in fast charging, over 220,000 customers in 34 states. 83% of Californians live within 10 miles of an EVgo charger, and 41% of Americans live within 10 miles of an EVgo charger. And they have around 50% of the DC fast charging network. Obviously, they're competing with ChargePoint as well. That's their biggest competitor. But all these numbers will look great, and they have a nice footprint already basically along the coast, and hopefully they will do more to expand, because we know that there's going to be literally millions and millions of EV vehicles on the road throughout this decade. So a lot of growth ahead. So what I really was impressed with is, first of all, they have a partnership with Uber and Lyft. So that's a huge deal, because Uber and Lyft, those are the biggest ride sharing platforms in the United States, and they have a lot of basically opportunity to partner with them. And then they're also partnered with Tesla, so the first charging network with integrated Tesla connectors as well. So that really stood out in this presentation and really got me more excited about this company. So now let's kind of head down a little bit more, and we're going to talk a little bit more about the growth. So as I mentioned before, here's a projected growth. They said by the end of the decade, there should be around 14 million EVs in operation, and by 2040, 76 million, guys. So, this is a huge opportunity. There's a little bit more risk if you're chasing some of these stocks, like obviously Tesla's a great buy because, they have proven deliveries. But if you're chasing some of these stocks like Fisker, Canoo, Lordstown Motors, there's some risk here because we're really not sure if these companies are really going to basically be able to deliver these vehicles. But if you want to kind of play it like the California Gold Rush, a lot of people that made money in the California Gold Rush sold picks and axes, then that's what you want to gravitate towards EV charging stocks. It really doesn't matter which car people are buying, whether it's a Tesla, a Fisker, a Canoo, or whatever, they're going to have to charge these cars. So one of the things that also stood out in this presentation is that by 2040, 28% of all vehicles expect to be battery electric. So, that's just a remarkable, and it just shows that obviously there are literally billions of vehicles out there that need to be replaced. So these charging companies are just going to continue to make money for the years to come. It's just a market that shouldn't really slow down in any of the demand. And as you can see here, they basically are able to support lots of different vehicles, which you want to see, and they're really focused on fast charging. So some of the other things that stood out to me in the presentation, and I'll be sure to link to this in the description so you guys can check this out yourself. So like I said, they have a partnership with Tesla, so obviously that's definitely an exciting partnership. A lot of Tesla owners will be able to look for these EVgo locations, so when they're not using Tesla's own supercharging network, they'll be able to charge their vehicle at EVgo. So really awesome for a lot of you guys that out there that own Tesla stock. Perhaps you want to take a closer look into EVgo. They have a partnership as well with Lyft, and they're basically, just getting started. I would think they're definitely going to grow a lot more, and the fact that they're taking this company public means that they're really serious about growth. So here's another thing that I also noticed It says that operational excellence has led to a 98% uptime, resulting in superior customer satisfaction and plug share scores. So they even have a higher score than Chargepoint. So once again, another really good plus sign for this company. So now what I want to talk about is I want to talk a little bit more about the actual kind of numbers and what we're going to be looking at financially with this company. So one of the bad things about EVgo in comparison to Chargepoint is that Chargepoint is doing around 10 times the revenue. So, as of 2020, this is an estimate. EVgo is doing around 14 million in revenue, and they expect to ramp that revenue up to well over $1 billion by 2027. So I just recently checked what Tesla's price to sales ratio is, and they're currently going at a price to sales ratio of about 25. So potentially by 2026, 2027, this could be a 26 to $30 billion company that's currently valued at about $4 billion. So if you were to buy the stock now and were to hold it for a few years or so, there is a lot of upside in this stock, at least 5 to 7x upside, assuming you were to hold your shares and they're able to hit those revenue numbers. So lots of interesting growth there. And as you can see here, they're projected to really increase the gigawatt hours network output, and they're looking to become free cash flow positive as well within a few years. So it looks like within around 4 years or so. So these are all excellent numbers. And if they're able to hit these numbers, I think there's a lot of upside in this stock. So be sure to check out more of this information, guys. Really excellent presentation. As you can see here, really like this presentation. Also kind of gives you some of the easier plays that you can find here. If you're looking for EVs, you can go with Tesla. It's probably the easiest play. Chargepoint and EVbox are two competitors as well. And they even mentioned Solar Edge, which is another company that I talked about last year. I said that was one of the solar stocks I think that could double as well. So just really interesting information here all around, guys. And I think that if they're able to hit these ridiculous claims, so they're saying that they can do 151% compounded annual growth in terms of revenue. That's just phenomenal. And that far beats a Tesla, EVbox, and even Chargepoint. Chargepoint had around a 60 to 70% revenue growth number, and I thought that was outrageous. I've never really seen any EV company say they can do 151%. So if they're able to hit this numbers, this stock is going to absolutely skyrocket, guys. So now I want to talk a little bit more about my price prediction and what I'm actually going to be doing with this stock. So as we head back here, we can see that the stock hasn't really been trading that much. It's only at around 20 bucks. Market cap of the company after the merger would be around 4 billion, and currently, if you guys check Yahoo Finance and look at the market cap of this SPAT, it's about 600 million. So 151% compounded annual revenue growth. If they're able to hit these numbers, this stock is going to trade a lot higher. So one of the reasons why I was so bullish on Chargepoint, and I still am bullish on Chargepoint, is when I first talked about the stock, I believe it was like 14 bucks. And I said, guys, it's just simply too cheap. You need to buy it now. And that stock ran up to around 40. So basically from 10 to 40, around 4x. So let's say that EVgo is able to do similar numbers. So obviously the revenue is only a tenth of what Chargepoint's revenue is. But like I said, the company is also valued at a lot less. So right now, Chargepoint would be around 15 billion and EVgo would be around 4 billion. So I don't think it's outrageous to think that EVgo could be $150, even a $200 stock within a couple of years. But right now at $20, it's just simply too cheap and too undervalued. Those compounded annual growth numbers and the fast charging, the focus on fast charging under 30 minutes or so is going to be really attractive to customers. Obviously, Chargepoint has a ridiculous huge footprint, and I'm still holding on to that stock. But now I'm thinking about perhaps it would make sense as well to add a position in EVgo as well. I like their focus. I like their partnerships with Uber and Lyft and Tesla. And I think there's no reason why, a rising tide can't lift all boats. There's no reason why multiple companies can't do well. I mean, just where we saw the EV space, NIO's done well, Tesla's done well, Xiaoping's done well. Many companies can do well. It doesn't have to just be all or nothing into one stock. So that's what I think. I think a future price target. I think this stock is at least a $40 stock, and long term, I'm looking at around $150 to $200, and I'm talking about the next 2 to 3 years. But right now, simply too cheap. completely undervalued and not really getting the volume that this company deserves, just at around 1 million shares a day. I know there's a lot of other plays out there like GameStop, AMC, a lot of biotech stocks have been popping, but I think this is a little bit under the radar, so I'll definitely be picking up some shares next week. And be sure to do your own due diligence, guys. Don't invest in money that you can't afford to lose. But for some of you guys that checked out my AMC video, this is one of the alternative type of companies I think is a little bit safer. When you're looking at a company like AMC, Netflix and these other competitors have really taken their lunch, but companies like EVgo, Chargepoint, these companies are just guaranteed to make money because you have to charge your electric vehicles. And the more electric vehicles that come on the market, the more money these companies are going to make. So that's it until next time, guys. I hope you enjoyed this video. Please smash the like button if you enjoy my content. Smash the red subscribe button to see more videos from me. Be sure to check out my daily stock watch newsletter every Monday through Friday and my private Discord chat. So that's it until next time, guys. Take care.